Justice me.
Money in the way for what they got to say. I throw it up, it's falling down, it's definitely in the way.
Welcome back, guys, to Chart Talk episode 9 with Shake and myself. We're going to be going through the market outlook of the week, member ideas of the week, good trade, bad trade, top ideas, as well as the book of the week. Sound good, Shake?
Oh, I'm ready. It's 5:30 in the morning in Denver. I'm ready.
So I'll get started with the market outlook. Again, last week we saw a little volatility. The market pulled back a little bit. We had a nice little bounce. This is starting to remind me a little bit of the end of like 2018 when we had like that first kind of correction and we started to bounce around. So for now, like the big out in the SPY is below 280. We can still kind of chop around in this 20-point range, but we definitely still want to be a little cautious. We do have Europe at lows, emerging markets near lows, China near lows, India back near lows, and Russia also rolling over. So when you have a lot of the other countries very weak, and again, we've been the leaders, eventually we kind of follow suit with the rest, of the world. So we want to just keep that, in the rear view as well. Shake, do you have anything to add?
No, I think it's going to be definitely interesting to see if that pivot we got last week holds or not in the market. I don't really think – I think it was more of a suckers rally we got towards the end of the week because we didn't see names. We saw names moving higher last week, Wednesday and Thursday, but it wasn't like a bottoming effort. It wasn't in mass stocks ripping higher. So for that reason, I think we just got a short-term rally, and we're going to kind of see some more downside soon. And I think all these China headlines are just going to catch up to us. So, I think it's going to remain volatile for a little bit.
Nice. All right. I think we could jump into the member ideas of the week. Definitely got to give a big shout out to Nick Neff for his second comma day. Gina, with another comma day, shout out to her belt. Andrew Hong had his first comma day in sales on eBay, which was good to see. And then Alejandro, he had his first comma day as well. So it was great to see that even given the not great week that we had last week, members were still putting up some solid numbers.
Andrew Hahn came to the bar. We couldn't get him in. He's 20 in like 10 months. Couldn't get him in. It's brutal.
Not surprised at the least to say that.
Yeah, it's good to see him
though. Let's see. We got Nicholas Barr. He had a couple names. He had light through 64.
Oh, 64, 62? 64, yes. I guess, is the level. Great power earnings gap. This name went into hiding for a bit. We used to trade this name like crazy last year. No, I really like that. It could be making a comeback. Obviously, I'd like to see a few weeks of consolidation at the level, but you don't always get that. But overall, it definitely looks like a great chart.
He also had MEDP. I believe it was through 80. Another earnings flag.
Definitely. Nice little earnings flag. You want to see that, again, same thing. Just base out a little bit below that 80 and kind of let the other moving averages catch up. The longer it does it, the better. But these earning names, they often don't wait. So, that one looks good too.
He was also looking at this MU for that sneaky buyback through 44. It's been a level since pretty much like 2018 that we've been trying to buy through.
Yeah, I can see that. The semis came back. They pulled in a little bit. So now it could be that time. They had that little 50% retracement. So, yeah, I can see that one.
And then he had this BGNE through 139, 140.
Oh, shit, that's a sick base. Yeah, we've been watching this name for a while. I kind of forgot about it. This is a really, really nice base. And this is a crazy biotech name where it really runs. So if you can catch this one out of the base and a powerful macro pattern setup like that, I like that one a lot. I'll be involved in this. And
the last one on his list was LCII through 94.
Yeah, this one's so tight. I love this. We were looking at this last week. It's so incredibly tight after earnings. It's like a really nice setup. It'd be a great setup if it didn't have earnings. And the fact that it just had earnings and it's still this tight, it's pretty rare to see this kind of tight setup. So like it a lot.
Yeah, all around, all solid ideas. We had Nicholas. He's looking at AMED through 137.
Yeah, I don't think it's ready yet, but I think in time it could be ready. The weekly chart looks really nice. The daily chart's isn't there yet. It had the nice run up, and then it kind of pulled in after earnings, and now it's kind of trying to recover around that level in this like 135 area. I just want to see it. Give me a 2 weeks more flags of this 140, and then just like a A+ setup.
Yeah, I like that 140 more. It's like I'd rather just, like you said, let it sit up. I'd rather just buy the bigger level than trying to cheat in by $1 or $2.
Yeah.
Let's see. We got E-Rich is looking at EHTH through 110. Another earnings flag.
Yeah, that one's not ready yet, but that was just another one of these earnings gapping up the highs. Complete momentum name. I think it needs some time up here still. It's still trading pretty wide and loose. But other than that, I mean, definitely one to keep on the radar.
Yeah. Then we got your boy Tom Van Meter came to the Cali meet.
Yeah.
He's looking at VMC. Let's see, VMC through 142.
VMC.
Yeah.
Tom's my man. He is funny. Yeah, I like the weekly chart on this. Huge macro level. What is this? The 141 area. Yeah. Yeah, makes sense. Nice daily flag in front.
Let's see. We got Bryce looking at HMSY through 39.
Yeah, this one's not ready yet, but I'm staring at this one too. The 8-day is finally catching up. This name trades so thin, so it's like if it's out of play, it's really annoying to trade from an intraday perspective. But overall, macro pattern is there. I mean, definitely looks like it's going higher in time.
And then we got Daniel Earnbright looking at Duke, DUK through 92. Utilities name.
Yeah, it's a nice pattern. Utility name. So maybe it gets some love. I saw a lot of these REITs and energy names setting up in the scan last night because we saw the market sell off. So there's usually a flight to safety in those stocks. So I could see it. I'm not dying to buy a breakout in Duke Energy.
Yeah.
But the patterns, a great chart. It just from name recognition standpoint, I'm not expecting like a 10% runner out of this one anytime soon.
Yeah. It's funny you said that because Daniel's the next member's idea was AEE through 78, which
nice.
is
Well, no. It's funny. That's why you learn a lot about volatility and these times. It's like when you're doing a huge macro scan of all the charts around, you're going to find so many of these energy and utility names looking like they have like amazing charts. So when I first started trading, I'd be like, oh yeah, like be so excited about these charts. And then you just see they don't really break out. They don't have the same kind of moves. So after a while, like, I'm not really excited about the charts or trading them as much. But if I was a newer guy and I was just from a pattern recognition standpoint, like that's where all the love is right now.
Yeah, I feel like that's even like a kind of a red flag. Like even if you pull up like VPU, which is the Vanguard Utilities ETF, and it's bull flagging at highs, like right under 136, and like it looks great, and it's like okay, the most risk off sector looks the best. Like that should be a little bit of
exactly. And that just takes time. That takes from looking at charts every week to notice that.
And Daniel actually had like a pretty good question on APPN. So he bought it through 42 last week, and he didn't know what to do given that it was going into earnings. And like we said, we always sell prior to earnings, but chart-wise, it looked so sick through 44.
Yeah.
And he's like, well, it looked great, yada yada yada, because it's up 20% on Friday. And it's like, yeah, it looks great after the fact, but it could have easily just gone.
Oh God.
Smoked. But it was like that, just because the trade worked doesn't mean it was a good trade.
Random rewards, absolute random reward there. Take a name into earnings, it hits. You think it's a good strategy, you do it again, you get fucking smoked the next 5 times you do it. but hey, it worked out.
Yeah. Let's see. Okay, you want to? We can jump into good trade, bad trade. I feel like I think we ran through all the ideas.
Yeah, no problem. I mean, I wasn't too active last week. I only took one trade, so I'll talk about this LHCG. It was earnings trade. It was really a quick in and out trade. I wasn't too active last week. Super volatile market. We just saw a breakdown. I don't feel I need to be the best trader in the world in that environment. So this LHCG, leading name in the healthcare space, just pretty much open range breakout. I sold some for 3 to 1, take some profit, got out the rest, break even. Nothing special trade. Nothing special week last week. Didn't go nuts. Just kind of waiting for my opportunity, waiting for my meatball. So I'm fine with waiting right now while the market's really difficult. So that's really all I got from a good trade, bad trades perspective.
Nice. The one good trade I had this NOC through 360. We can see it was setting up. It's been resistant since early 2019. Oh, no, early 2018. Sets up to 360, couldn't break, pulls all the way back in, gets right back up there. Or was past earnings, so I took that through 360, break even stop. It's working pretty good. Last week for me was kind of just a week of like support buybacks. DRI through 120, KSU through 118, GLW. That one didn't work. VFC 82, and then PPG worked really well through 112. So it was just me kind of taking advantage of some of those little support buybacks. Again, some didn't work, some worked okay. Most are pretty much all break even stop. So if they don't work, I don't really care. Other than this GLW, which clearly ticked me in and just got some. Okay, so that was pretty much the bad one. And then KMB was like a funny little lesson where we've been looking at this 138 for some time. If we zoom out, we can see it's been a level since 2016. And I kept buying 138, buying 138, buying 138. And being in the trade, it's like you just expect it to go. And looking at it now, because now that I'm not in it, I can see clearly say that 140 really was to buy. So, when I was buying it on July 18th through 138, when I was buying it on July 26th, as well as on August 6th, all those times, it was just because I was buying 138 the prior time. When looking at it now being flat, because I had a break-even stop after Friday, it was like the buy really was just 140. And I just buy 138, which is a horrible price. So now it's just like I'm flat in it. I have no opinion on it, but I'll look to buy 140 versus trying to buy that 138, which was kind of some of the members' ideas where it was like trying to buy like the $2 too early.
Yeah.
Like that AMED, it's just like I'd rather buy 140 than buy 137. This is a perfect example. It's like I should be buying 140 versus trying to cheat in and buy 138.
Yeah.
So that's kind of like the bad trade that I pretty much spent like a month in. That was like my lesson learned. So let's hear something about this Cali meetup.
Oh my God, it was so funny. It's so funny because whenever we meet up, it's just such an eclectic mix of people. There are 21-year-olds, 50-year-olds. Everyone's just like getting drunk, and it's hilarious. Dangerous Dave, finally got to meet him. I got his dad to come out. He was telling us stories about he had a $100 million short on Tesla. He's like, and they're like a California family. All the kids in the air are like they love Teslas and stuff, and he's just in the auto industry, so he fucking hates Tesla. He knows all the story and like all the supplier and all the issues from that kind of perspective. So he had a $100 million short on them, and now we had this crazy weakness. The chart up, and this huge down move from February to June. And he said his whole family was like pleading with him, like, please cover, like, please God cover. He made like 20 or 30 mil, like covered like 3 generations of family. But he was the man. It was great. I got to finally meet Nathan. Got to finally meet a ton of guys we've been talking to for years. Never got out to Cali, and met him. It's so funny. It's like I've been talking to these guys online for 3 years. We get together. We're immediately buddies. It's just a great atmosphere. It's like the best part about trading experts. You go anywhere in the world, you have friends. It's cool. So very tired right now, but such a great weekend. Can't wait to get back out there.
Nice.
Spend another $5,000 at bungalow.
That's how much it was.
Yeah.
All right. Top ideas for the week.
I don't think this is ready yet. I love this Pinterest chart, these pins. It just reminds me of, this has been a trade for us for so long. I'll bring up the square chart, SQ, and everyone forgets when I can't even zoom out that far because it looks so small in the chart. When it finally gave us that gap up here it is, that gap up to earnings, kind of based out, and that was like, it was so long ago, it was at $19, and the stock made a run to 100, huge move. And now this pins, it looks like it's at highs, same thing, like it looks like dramatically at highs, but then it goes on a run through IPO highs, and these things, this is when these stocks really take off. So I think this one in time, if it sets up more for this 35, absolutely love that trade. And then for this week, trade of the week, the CDAY. I tried it on earnings day. When was that? I talked about it last week in the good trade, bad trade, July 31st. Wasn't ready yet, just consolidated, gave us an inside week. So I'm looking to buy this one through the inside week high, $53. 54 is probably the better resistance level, but gave us an inside week, so I'm going to look for an entry there. But definitely going to focus on those 2 names this week. Probably not. I mean, I'm still not, dying to put on longs and dying to put on major risk right now with the market and the headlines. So I'm going to be a little more risk off, but those are the 2 I'm mainly focused on. Yeah.
Pins also even like reminds me of like GoPro through 50. Like
yeah,
way back.
All those IPO names, Shake Shack. Oh, GoPro is the sneaky one too. I'll bring up the chart where it wore everyone out, and a lot of guys missed this move because we were so focused on the name, and then when it finally went, everyone had taken so many losses in it that they didn't want to buy it back anymore. It went from 50 to 100 in like 3 weeks.
Yeah. The main thing I'm looking at, again, still kind of setting up, is this PPG through 120. I really don't expect it to go this week, but that's something just still looks sick. Really zoom out. It's been setting up since 2015. This textbook is, we look for. That's the main thing. This DXCM continues to, surprise me. This thing just still can't break this 156 to save its life, but
Yeah,
it keeps getting up there where eventually this thing's going to have to go. It's just tough right now because it is so wide. You get,
Right.
The outs 40, so it's really tough to buy 156 when it's 16 points.
and that's just a fact of the market. The volatility is going to stretch these names up and down, so it makes finding tight entries in stocks much more difficult. So, I mean, from a swing trading perspective, that's why I take my foot off the gas.
Yeah. I think we covered everything. I think last up we got book of the week.
Oh yeah.
What do you got?
This is a complete reread for me, but Extreme Ownership, Jocko Willink, sick book, just all about accountability. It's so great from running a business perspective. A perfect example is like waking up this morning. I didn't want to wake up this morning. I'm very fucking fortunate. I can trade on my own time and have this kind of job, and I go to California, meet a ton of people. So it's like you just take control of all your actions, and it really kind of roadmaps your plans and leadership, and just an all around great book for business. Highly recommend it. Extreme Ownership, take accountability. That's all I got.
Nice. I got Originals, finally a different book from last week. This was by Adam Grant. He also authored the book Give and Take, which I read probably a month ago, and that was actually a really sick book. There was one good story in this about like the founders of Warby Parker, and like you put me onto them because I can't see shit. And he actually passed on investing in Warby Parker because he was like their mentors back in the day. And he said the two reasons why he passed on it, one was he had 20/20 vision, so he never bought glasses before, so he didn't understand the industry. And second was that the four founders stayed in college. They didn't drop out. He's like, if you guys all dropped out, you guys are like much more serious entrepreneurs, much more about this business. But the fact that you guys are kind of hedging your bet staying in school, I'm going to pass because you're not fully in on this like idea. And for them, they're like, well, we're just covering our downside. And it kind of goes into the fact that like most people assume entrepreneurs to be very much more like risk takers when really we're more of like risk mitigators.
Right.
I mean, even like, they talk about like Bill Gates, like he's like the dropout when really he spoke to the college and had a year to come back if he wanted to. He secured a loan from his parents. So you hear like a soundbite of he's a college dropout, but really when you look behind the scenes, he really was like covering his risk. So these four founders, they were able to really make Warby Parker work because when they did graduate, they all got regular jobs. So they had income that was coming in while they were building this business versus being cash trapped, just trying to like force it to work. I think that relates a lot to like a lot of the guys that will DM us. They're like, I want to quit my job and be a trader. And it's like, no, you don't.
Yeah.
Like this is like the added income. This isn't like replacing another source of income because when things get rocky like this week or the next few weeks, and you still got bills to pay, you got to put food on the table. This is a time where if this is your only income, you're going to force those trades where if you're working, you just go do your job. So I think that was like a very good parallel to a lot of the questions that we get asked about, becoming a full-time trader. And it's like, easily do both. You don't need to just do one. So.
Yeah. No, good stuff.
Yeah. I think with that, I think we closed it. I think we covered everything. Oh, we didn't mention, if you guys are still watching at this point, I guess drop us a thumbs up. Joe. I think with that being said, until next week, guys.
All right,
good luck.
kick off this week. Let's get it going.